Governor, I just want to touch on one issue very briefly because I'd rather go on to things that I think are more important, but I almost believe there's sort of been a bit of a conspiracy feel about this issue today. So I'd prefer the question and answer to be quite short. The $8.8 billion grant that we've been talking about to the Reserve Bank from the Treasurer, do you believe that for our credibility, for our sustainability, as in what you operate in, a good thing or a bad thing?
It's something that I welcome because it restores the capital position of the Reserve Bank quickly to the long-run position I'd like to be at.
Thank you.
So I welcome it. That should be clear.
Thank you. An issue also that you've touched on, which probably concerns me a little bit, is the quantitative easing thing that happens globally. As you mentioned earlier, the United States, Japan are doing this quite significantly as well now. The United Kingdom, I think, in a little way, then Europe in some ways. We talked about monetary policy certainly not being I think the quote was, not a growth, doesn't cause growth in the economy. Obviously quantitative easing I wouldn't have thought would do that either. I suppose what I'm asking, what do you think it says about our system, if you like, our global system? We're all part of this, that we need the system needed something like this to provide liquidity, or whatever the reason was it was initiated?
Easy monetary policy provides a cyclical boost to growth. I mean, we should be clear about that. The long-run growth we were talking about in Mr. Buchholz's questions and some others to do with productivity, that's a supply thing. We can't create that, but under normal circumstances, monetary policy can act to dampen or speed up demand in order to try to keep the demand track for the economy roughly in line with the supply track. The supply track's determined by other things, but we can usually, I think, do a reasonable job of keeping demand near where supply potential is. The problem that the major countries had was they had a very large adverse shock to demand, very negative shock. It was so big that the interest rate needed to compensate was a number lower than zero. Obviously, you can't do that. So the position, and Japan got to this position in more than a decade ago. They're in fact the original exponents of quantitative easing. They invented the term, I think. And so the interest rate instrument having reached the limit, what do you do then if you want to try to support demand in a cyclical sense? And the answer has been, well, we bring other interest rates down. So not just the overnight rate, but a whole bunch of rates out the yield curve, bring those down, bearing in mind that in other countries those long rates are probably more important for private borrowing than they are in our country. So they did that, and they've also had the view that taking certain low-risk assets out of the system by the Fed buying government debt and so on prompts private asset holders to go and look for slightly more risky assets. And more risk-taking is part of... So the attempt has been to try to support demand in a cyclical sense, because clearly they've got excess capacity in the economy in a cyclical sense. That's what they've been trying to do. I guess the jury's out on how effective that is, and we don't know what the counterfactual would have been had they not done it, of course. But I think that's the background to what's been going on. It's the size of the negative shock to demand that you have when you have a financial crisis, a banking crisis, and coupled with that in Europe, a certain sense of sovereign debt crisis as well, at least in some of the countries.
My colleague, Dr. Hendy, earlier alluded to, I mean, there's pitfalls, obviously, with this. What do you think would be the of us not being able to taper successfully, if you like? I mean, if every time they talk about this or started to talk about starting to lower the buying they were going to do, what is the potential?
Well, I suppose there's two risks here, aren't there? There's that they will taper and that something will go wrong as a result, and another risk is they won't. and we keep getting the spillovers from this to other countries that are, not entirely comfortable for longer. I mean, one could talk about both those risks. I think the best scenario from the point of view of Australia, our 1.2% of GDP in the world, from our narrow point of view, the best scenario is the Fed sees its way clear to start the taper soon, that they manage to do that without too much disruption in global markets so that they can therefore continue it and eventually end the buying of securities, and at some point after that gradually start the process of the Fed funds rate going back to a normal level. Mm-hmm. If a scenario that looks like that is a good one, because it's a scenario where the US economy is mending and healing, where other people in the world are able to accommodate the Fed changing course without too much drama, and where we slowly but surely get back to a more normal world. I would love to see that. I really hope I can see that over the next several years, but I think it will be a long journey.
We've mentioned the high Australian dollar, and you've also mentioned that it's been uncomfortably high at certain times. Do you think that part of our high currency, if you like, or higher currency, obviously there's been terms of trade that have helped that over the last recent years. Do you think quantitative easing plays a role in that as well? Obviously there is some belief by some in markets that when a country, in some ways you could say it's printing money when they buy these assets, creates some uncomfortableness with their currency, and therefore that's been part of the reason of our high currency.
I don't think there's any doubt that the conduct of policies by the major countries has spillovers, including through exchange rates. That's not in dispute, I don't think. I don't think it's unique to quantitative easing that you get spillovers. They change interest rates. That has major spillovers as well, potentially. That's always been the case, and it always will be. The QE element is another part of that, but it's not as though there were no effects on other people's currencies under normal monetary policy and only under QE. Far from it. There's always such spillovers. That's the world in which we live.
I only have two more questions. If we were to go back, the average man in the street is often, I think, bemused at economics, and economists maybe. If we were to go back early 2008, very few people were talking about a potential global financial crisis, which was literally on our doorstep. If you were to look at where we are now, and we've had lots of policy reactions to a global financial crisis, where do you think we sit? Are we have a more sustainable system, a system that has less bad potential debt if you're around than we were at the start of 2008?
Well, there are several dimensions here. I'd have to say that I think even in early 2008 there was a lot of nervousness because people could see there were stress fractures, if you like, and no one knew for sure, I don't think, just exactly how that would unfold, but there was nervousness at the time, without doubt. 5 years on, nearly 6 years, actually, where do we stand? Well, we've got an economy which, although growing at a rate that none of us feel is quite as good as we want, it's 12 or 13% bigger than it was then. Our banking system is probably today stronger than it was then. We have an unemployment rate higher than it was then, but really by historical standards, by our standards and by the standards of many other countries, still pretty low. I think we have a record of macroeconomic success in that period that, in all immodesty, I suppose, I would say many other countries wish they had. Certainly true, we have a build-up of government debt, and that's a medium-term challenge for us to address. But as I've said before, it isn't actually about a surplus or a deficit in any particular year. It's about a credible path for the medium term. That's really what we should be focusing on. That's the conversation we need to have. All that having been said, there are still, even with the debt numbers that have been put out yesterday and the projections, boy, there are a lot of countries who'd rather have that set of numbers than the ones they have.
Sure.
I think we have problems. We have big challenges. We've articulated some here today. But I'd rather have most of our challenges than the ones I see around the table of governors I sit with a number of times a year.
Okay. One last observation and one last question. I just reiterate the observation, again, my colleague Dr. Hendy said about a regional representative on the board. I certainly understand that no one should take secular views to that, but obviously we often have unconscious biases or perceptions of the world, and I would certainly support the Treasurer and yourself making recommendations for someone, whatever, and I'm actually happy to rule in Queenslanders, any state, but for someone from a regional area. The last question I have, Governor, is if you were to be in my seat right now rather than yours, and besides taking a huge pay cut and probably having less influence over many things than what you have now, if you were me, what would your focus be? What would be one thing that you would be trying to do as a humble backbencher in a new government right now?
Well, I don't give gratuitous advice to people. I would offer the observation that the influence of people such as yourself compared to mine may be greater than you're assuming.
A good note to end.
I don't underestimate the power of intellectual leadership in the Parliament and in other places to lead opinion about what sort of a country, what sort of economy we want to have, and the kind of things we need to confront to get there. I think the community is looking for that straight talking intellectual leadership they look for some from me, but all of you as well. Don't underestimate the importance of that.
Thank you.
Thank you very much, Mr. Hogan and Governor. And I now